All right. Welcome, everybody. I'd like to begin by acknowledging the traditional owners of the land I'm joining you from today, the Wurundjeri Woi-wurrung people here in Melbourne. I pay my respects to their elders past and present, and to those elders and traditional custodians of the land that you're joining from all around Australia today. Thank you for joining us and welcome. My name is Purdy Bowden, Executive Manager, Policy and Blended Finance at the Australian Sustainable Finance Institute, ASFI. It's my pleasure to host this debrief webinar of the 30th UNFCCC Conference of the Parties, COP30, that took place last month in Belém, Brazil. The conference happened against the backdrop of some really significant shifts globally. Here in Australia and around the world, the impacts of warming climate are being felt in real time through more extreme weather, coastal erosion, and pressures that are flowing directly into our financial system. And just as an indicator of this, in Australia, home insurance premiums have risen by around 28% over the last year, driven largely by climate-related losses and reinsurance costs. At the same time, the global energy economy is undergoing a structural transition, and not everyone is on board. Some countries are leaning fully into a future built on clean energy, with new industrial opportunities. Others are holding tightly to legacy systems, and it's clear, though, that clean energy and climate policy is no longer just an environmental issue. It sits at the centre of national competitiveness, industrial strategy, and regional diplomacy. This is the complex landscape that formed the backdrop for COP30 in Belém, where countries brought forward their 2035 targets and attempted to make progress in a multilateral system that's under increasing strain. While outside the formal agenda, the focus on practical coalitions, investment opportunities, and the market frameworks that underpin them continued at pace. These global and geopolitical shifts translate directly into financial risk and opportunity, and for ASFI members, such as banks, investors, and insurers, navigating these dynamics is core business. We know that while private capital has a central role to play in achieving the Paris goals, it also depends on clear signals and credible policy settings from governments to move at the pace and the scale that we need. ASFI sits at the intersection of the public and private sectors, and we're pleased to bring both these perspectives together today to unpack the outcomes of COP30 and what it all means for the path ahead. To get us started, I'm delighted to introduce David Higgins. David is the Head of International Climate and Energy at the Department of Climate Change, Energy, Environment and Water. He is one of Australia's most experienced climate negotiators and a leading expert on climate finance and international climate policy. David, thank you for joining us in what I know is a very busy period for you and off the back of a rather exhausting few weeks, if not a couple of years. David, just to get us started, and I know you can't stay for the whole session, so really appreciate you making the time, but Australia was not successful in its bid to host COP31 in Adelaide. Instead, COP31 in 2026 will be held in Antalya, Turkey, but we did win some concessions. Australia will preside over the negotiations, and the traditional pre-COP meeting will be held in the Pacific. So can you just explain to us briefly what this means for Australia's responsibilities and our ambitions for COP31?
Sure. Hi, Purdy. It's great to be with you and the extended ASFI family. Yeah, unfortunately, I don't have as much time as I never have as much time as I would like for anything, but I don't have enough time, as much time as I would like for this conversation, but I'm delighted to be part of a portion of it. It was, as you said, a challenging couple of weeks because of all the circumstances you described. The geopolitical backdrop is genuinely challenging, and I think Brazil had a set of particular domestic and regional and geostrategic challenges it was seeking to navigate too, and the operating environment in Belém was challenging as well, which complicated things. I've been to 11 COPs, and this was the only venue that ever caught on fire during the course of the fortnight. So it was not without challenges. But to your specific question. Yes, we didn't succeed in securing hosting rights to the physical COP in Adelaide, and that had been our singular objective for a long period of time, and that is something that the team here is still working through. But the arrangement we did arrive at, I think, is important to see for both the opportunities it presents for Australia and I think in particular our Pacific partners, but also for the contribution it makes to settling what was at risk of being one of the big kind of failures of the COP in Belém itself. We ran this all the way down to the wire, and the alternative to reaching a compromise of this kind was no agreement amongst parties to the COP president designate for the next COP, and the process would have defaulted to Bonn, where the UNFCCC Secretariat resides. And that uncertainty, that sort of leadership vacuum, was something that we and I think the vast majority of our partners felt would be really damaging to the process. And so arriving at this compromise wasn't something we had in mind from a long way out, but certainly did feel like the best way to try and keep the process ticking along, maintain some continuity, and arrive at something where we could offer a degree of kind of what we hope to be pragmatic Australian leadership just through what is a genuinely novel arrangement. So as you said, Australia will preside over the negotiations. Well, Australia will be president of negotiations in 2026 for COP31. That is not a position that has existed previously. This is the first time we will attempt to do this. It's been vetted in some quarters, including in the Pacific, as potentially a kind of innovative model that might work for some other partnerships down the track. I think it's the case that for a lot of smaller economies, the cost and the challenge associated with putting on the event that is a COP is really material. But maybe this offers a pathway for others to get more involved in the negotiations. But be that as it may, what we've arrived at with our Turkish partners is an arrangement that would have Australia retain exclusive authority to preside over the negotiations and all of the aspects therein. So that's convening the consultations, building the informal negotiating pathways, selecting ministerial co-facilitators, and all the other aspects that go into building the negotiating agenda that comes to its head at the COP next year. The COP itself will be in Türkiye, most likely in Antalya. We will work closely with the Turkish team in delivering or supporting them to deliver other aspects of the agenda, including the action agenda. But the negotiations themselves will be the piece in this that we will own. As the Prime Minister has said, Minister Bowen, my minister, will serve as the president of negotiations. And over the course of the time we've spent with the Turkish system, including at ministerial level over the previous weeks, I think we've arrived at a place where we understand one another much better than we did at the outset. And we're quite confident that we can build an arrangement that delivers both for Australian interests, for the Pacific interests, and helps, I think, bring Türkiye into a process that they've been kind of at sort of reasonable arm's length from over time in ways that deliver on their interests too. And I think the COP in Belém was challenging. The negotiated outcomes aren't what everybody was hoping for in all facets, and I can spend a bit of time talking about the finance outcomes if that's useful. But I think a lot of the support that we've received during the course of the process and subsequently for this novel arrangement sort of goes to the fact that I think there is real recognition that Australia might be able to kind of help bring parties together in different kinds of ways, forge some different kind of pathways to reach negotiated outcomes, and that's what we're going to be very focused on doing. You mentioned the Pacific, as have I, and what was very important to us and to the Minister, and indeed the Prime Minister throughout, was ensuring that wherever we landed, there was going to be a significant piece in this for the Pacific. Our indication from the outset, and we've been pursuing this for more than 3 years now, was really to use the opportunity to hosting COP to kind of elevate Pacific voices, to really shine a light on Pacific circumstances, both in terms of climate impact, but also the Pacific way of coming at solutions. And I think the outcome that we've arrived at really will allow us to give good effect to that in different kinds of ways than we envisaged, but certainly in consequential ways. And so that includes the pre-COP that will be hosted somewhere in the Pacific, and we're working with our Pacific partners to figure out exactly how and in what form that will take. There is agreement with the Turkish system that will include a leaders component, and one thing that the Pacific's been very focused on is trying to use the COP31 opportunity to provide a means by which global leaders are able to witness firsthand what Pacific climate impact looks like, and so that's something that we're very focused on. We've kind of elevated the prominence globally through this process in the importance to the region in the Pacific Resilience Facility, and we'll certainly be using our role and the pre-COP convening, but also aspects around it to really drive the capitalisation in the PRF. And we've agreed with Türkiye that there will be a dedicated session on access to finance for SIDS and LDCs as part of what happens in Türkiye in November, and we think that's really important too, as those of you who work with Pacific would be able to attest. Access has been such a singular issue for the Pacific for so long, along with other small island developing states and LDCs who just have capacity constraints that mean that the complexities of access modalities make it really challenging. And that's in part why the PRF exists, the dedicated sort of owned by the Pacific for the Pacific regional mechanism that really we hope is able to fill a gap, including on access that some of the global mechanisms just simply don't offer. It was one of its reasons for being, and so the opportunity to kind of really shine a light on some of these issues and perhaps work on some solutions is really important to us and really important to the region. If you'd like, Purdy, I'm happy to talk a little bit about some of the areas that we think we'd like to focus on when it comes to COP31 in terms of the negotiations, but I can also spend some time talking about COP30 and what we saw as some of the useful elements therein. Would that be helpful?
Yeah, why don't we see if we can fit both of those things in fairly briefly. But I think your comment about the experience of kind of deepening relationships with Türkiye team was an interesting comment, and I think it must have been a very intensive bonding experience that you went through over the past 2 weeks that will presumably set you up for ongoing discussions over the course of next year. But I did want to ask you about the negotiations because as we know, the UNFCCC process is consensus-based. It can be challenging at the best of times. With the state of global politics, the US absent, Europe distracted, and China's negotiating position not necessarily reflecting its real-world position as a renewable energy powerhouse, where do you see opportunities for Australia to drive progress through the negotiating agenda, and how realistic is meaningful progress in that?
It's a really good question, and I think it's probably too early to say, but I do think there is a real appetite amongst parties, and this spans developed countries and the G77 to find ways to come together that we probably didn't quite realise in Belém for a host of reasons. COP31 doesn't have a huge set of kind of very important negotiating elements to arrive at, which gives us kind of a bit more of a blank slate than we might sometimes otherwise have to work through. Some of the areas where I think there was real appetite for progress and the system fell short was obviously in relation to transition away from fossil fuels. I think some of the global stocktake outcomes from COP28, I think there are a lot of parties that are just feeling like they aren't part and parcel of what we are engaging on in the way that we would like to, and that includes the mitigation components beyond the transition away, but including the tripling and doubling targets and the like. On finance, obviously there was significant focus on agreeing on a new adaptation finance target at this COP, and that set of processes, that set of discussions, I think was really challenging. But as part of the global multi-rail text that we arrived at, parties did call for efforts to at least triple adaptation finance by 2035 in the context of the decision on the new collective quantified goal on climate finance, as well as urging developed countries to increase the trajectory of their collective provision of climate finance for adaptation to developing countries. I think obviously that was the consensus, but I think the view amongst most is that was a satisfactory outcome and an important one to arrive at. There was also a lot of talk around alignment of financial flows with the long-term goal of the Paris Agreement, which is reflected in Article 2.1c. I think the work on that didn't move as far as we would have perhaps liked, but certainly I think there are opportunities to build on that going forward. The Brazilian presidency and the Azerbaijani presidency released the Baku to Belém roadmap on the $1.3 trillion goal, which was one of the central outcomes arising from the NCQG decision last year, and that I think that was viewed as useful. Just stepping back from the finance space for a moment, I think on NDCs generally, I think there was, like the synthesis report makes plain that there is not enough on the table, and that gives rise to a whole range of consequences in terms of keeping 1.5 degrees in reach. But I think it is important to also reflect that we now have something like 120 NDCs lodged, the vast majority of which have either updates to 2030, but most of them are new 2035 targets. And more of those are economy-wide, covering all sectors, all gases, and are much more comprehensive in the way they are designed, and more intentional in the way they are seeking to map pathways. And that I think has been lost in some of the reporting around the mitigation outcome in particular. And I do think that speaks to the ways in which Paris is working, and Paris is certainly not working as well as we would like in all aspects of the Paris Agreement. But the NDC mechanism itself certainly isn't failing, and certainly is, I think, offering some real kind of rays of kind of positivity as we see things. I think the focus on NDCs being part of ways in which countries can demonstrate that they are open for business, that they want to be part of the transition to the new energy economy, it is increasingly part of the rhetoric. And Australia is in the fortunate position to be taking over for Denmark as vice chair of the NDC partnership, along with Brazil, and we intend to use that role to really sort of drive that point in particular. Some of you may have seen that we released an NDC investment blueprint that is our kind of manifestation of this same principle, and we're very, very keen on doing what we can through the role that we'll have in the negotiations, but beyond that to really kind of shine a light on that piece of the architecture that feeds so directly into what we're seeing and what we want to see more in the real economy.
Thanks, David. And that's, I couldn't agree more that we are seeing the fruits of the Paris architecture develop, and that curve, we were looking at a 3.5 degree global temperature increase at the time the Paris Agreement was adopted. And, we've seen a range of analysis, but credible analysis now say that we're looking at between 1.8 and 2.3 degree increase. And that is really significant. It's still too high. There's still more to do, but it's significant. I think the signal for the adaptation finance outcome sends to kind of focus attention on building resilience is also really important. Before I let you go, just a final comment, a question, I guess. There's clearly a role for the private sector, and you put out your investment blueprint signalling what that role is in the Australian context, which is excellent. Is there still a role for the Australian finance sector in COP31, or should it really be focusing more on those sort of more concrete deliverables that sit outside of the UNFCCC?
So the short answer is yes. I think there is an important role, Purdy. I think exactly what form that may sort of best be manifest is something that we're going to work through, and we'll be very keen to work that through with the sector, because it won't be in the way that we had originally envisaged it in the course of a couple of weeks in Adelaide, but. That is not to say that much of what we had contemplated, both in terms of the bounds of around which we think of the negotiations, but importantly in the space beyond it, in the what's collectively referred to as the action agenda, isn't really prospective. The appetite we are seeing and we witnessed in Belém is really strong, and I think there is a role for the Australian finance sector to play in that. And as I think of some of the kind of emerging themes that seem to be getting real traction around electrification, around investment in green industrialisation, in the prospect of future markets for green commodities, including green metals, I think there is real interest in Australia, real appetite to see whether Australia might be at the leading edge of being able to demonstrate what some of these things look like, and being able to showcase that in a range of forms over the course of next year, including what we're able to do in Antalya, is something that we're really energised by. We're going to have to be a little bit more creative in terms of the ways we think about delivering that, but I don't think that the door is in any way closed, and we look forward to continuing this conversation once we get to the other side of what I hope to be a restful Christmas break.
Thank you, David. We'll let you get back to it. Really appreciate you making the time to join us today, and I likewise hope that you have a restful Christmas break.
Thank you, Purdy. Thanks, everybody.
And I want to welcome our expert panel to unpack what all this means for finance and corporate climate action. I'm joined by three people who are on the ground in Brazil and who are deeply engaged in conversations around finance, transition and implementation. We have Joan Ko, Global Climate and Sustainability Services Leader at Arup, Kristy Graham, CEO of ASFI, and Nicole Yazbek-Martin, who is ASFI's Executive Manager for Standards and Practice. Kristy, let's start with you. I'd love to get your reflections on COP30 and in particular the COP31 bid outcome. You've remarked that not hosting COP31 is a missed opportunity, and you called the shared arrangement between Australia and Turkey a poor consolation prize. So can you tell us what you mean by that?
Absolutely. Thanks, Purdy, and great to be part of this conversation. I want to preface my comments by very much acknowledging the work that David and all of his team and much of the Australian government kind of has invested in this bid process, as well as a number of organisations outside of government. I think there was a broad recognition that hosting COP31 would be an incredible opportunity for Australia. And so a huge amount of kind of blood, sweat and tears, I would say, but particularly efforts over the last 3 years from the Australian government in really challenging circumstances. So what motivated and activated all of those different parts of the system around COP31 was, as David mentioned at the end, to be able to demonstrate that really practical progress on transition that's happening in the Australian context, and to use that to accelerate global ambition, whether that be around finance, climate tech, sustainable agriculture, nature-based solutions, green exports, industrial decarbonisation. There's a whole range of things that at a very practical kind of level, Australia is really breaking new ground on. It was also an opportunity to really drive that public public-private collaborative action across the action agenda that he mentioned was, given the stage of negotiations, that's really where, excuse the pun, but sort of the action is, or the ambition and the demonstration of implementation is really happening, and is kind of the main game in COPs, in our view. The Brazilians, I think, did a good job of showing how that action agenda can drive progress despite the geopolitics and the challenging circumstances in that multilateral negotiation sphere. But it's also clear that Turkey is now in control of that action agenda, and while there are still some opportunities, as David mentioned, there will need to be a whole lot more creativity, and there's a more limited scope in what can be achieved through the negotiations path of the COP. And I think this is a view that's very much shared by our members, and particularly those who've been most actively engaged. What all of our members and sort of the finance sector remains very activated and sort of ambitious on is there's very much a welcoming of the policy architecture that now exists in the Australian context, including the NDC. And it was interesting in the many events that I was part of in Belém, the architecture that we now have, including kind of sectoral decarb pathways, a taxonomy, mandatory disclosures. We were almost the envy of the world for having all of that architecture in place already. That's not to say there's still not more work to do in terms of the sectoral policy settings for climate, but we're in a good position, and we need to kind of use that momentum to continue to remain competitive in what is really a global race for capital and investment. So opportunities that will look quite different, but we don't want the COP31 sort of negotiations agenda to be a distraction on the government or on sort of the private sector side. The work needs to happen on the ground very practically.
Thanks, Kristy. And just sticking with you, because I'm keen to get your reflections on COP30 more broadly. And it has been a big year, as you've acknowledged, geopolitically for climate sustainability, in particular in the finance sector. We've seen an unravelling of net zero alliances, a rollback of clean energy incentives in the US, and heightened anti-ESG sentiment. But at the same time, and this is the sort of complexity of the landscape that we're dealing with, there's been unprecedented levels of investment in clean energy, which is now double the investment in fossil fuels. Almost all countries continue to have net zero commitments. David talked to the progress that's been made in the updated NDCs. The US is out of the Paris Agreement, but China, the world's biggest emitter, is overachieving its emissions goals and cementing its place as a renewable energy powerhouse. So how are these dynamics playing out in this sort of global melting pot at Belém?
Yeah, it's a good question. And my view will be quite different from David's. We weren't locked in kind of multi-party government to government negotiations. And so the politics and the challenges of the multilateral system were not as apparent in the many things that we were involved in as part of the action agenda. But I would say the global ambition from business, from finance, from the vast array of different civil society and research organisations that were on the ground very much continues. And despite kind of the US not being part of the Paris Agreement, and so the US government not being present, there were a range of different coalitions and groupings from the US, including the Californian governor, who were very clear about the US is not out of the game just because we've withdrawn from the Paris Agreement. I think, though, what we did definitely see in Belém is that there's increasingly smaller subsets of global coalitions driving ambition rather than this global consensus from governments. And sort of David alluded to the outcomes that were able to be negotiated and achieved, not necessarily being as ambitious as many hoped, but because of the state, or because of the process and because of the state of that multilateral system, that's not necessarily the tool that will continue to drive ambition. But interestingly, I think what Brazil also demonstrated, just despite the logistical and operational challenges that David also alluded to, was that the level of leadership that can come from sort of emerging markets, developing economies, was really a step change in how the COP process sort of operated. And they, at a domestic level, have had this ecological transformation at the centre of their government policy agenda, and that's at the centre of their kind of industrial and economic policy. That's not an environmental policy agenda, and have had that for a number of years. And so that economic transformation experience and sort of approach that they had been able to, or have been sort of driving domestically for a number of years, was a really excellent platform to kind of showcase what could be done at that level. I think what we saw was them using that experience and credibility to drive high ambition coalitions across a number of different areas. And one example was on tropical forest. There was both sort of a declaration, but the tropical forest financing facility, which I think was a really great example of using quite a practical kind of initiative that they'd been leading the development of for a number of years, but that was announced at COP. That it blends public and private capital at the fund level. So the contributors are both developed country governments, developing country governments, as well as private investors and philanthropic investors. And there's already commitments from Norway, Germany, Indonesia, Brazil, France, Dutch, as well as Minderoo. So great to see kind of an Australian philanthropy stepping in and playing that leadership role early. But essentially the fund, which will be managed by the World Bank, will invest in a portfolio of corporate and sovereign bonds that are as a minimum doing no harm to the objectives of the fund, which is to protect and conserve tropical forests in tropical forest countries. And the differential between sort of the cost of capital and the returns on that investment portfolio will be distributed to tropical forest countries based on satellite imagery of them retaining and conserving tropical forests. The process through which the Brazilians sort of developed that structure of the fund also involved a lot of local community and Indigenous people a sort of consultation and co-design, and 20% of the payments being made to tropical forest countries will go directly to local kind of forest owning communities. So it demonstrates kind of a lot of things in terms of the innovation, but also the ability of different groups and coalitions of high ambition, not just countries, but a whole range of kind of civil society, local community, Indigenous peoples groups to drive that. A couple of other things I would mention in terms of high-level corrections. One was this real sense of urgency for the pace and scale of action that came through right across the action agenda and all of the events that I was at. It also came through, I would say, in the negotiated text as well. So it was the first time that there was this acknowledgement of overshoot from 1.5 degrees. But at the same time, and this goes to your kind of comment, Purdy, about the complex nature of the dynamics in these forums, that parties did acknowledge the Paris Agreement is working, and as you talked about, that it is bending the emissions curve, and there remains a commitment to 1.5 and a commitment to closing the adaptation gaps. So broadly, I think that is a very positive signal from global governments. And that should be what people on this webinar kind of take away, despite the headlines that you may read in some newspapers. There is still solidarity around that commitment to 1.5 and implementation of the Paris Agreement. The urgency, I would say, was really obvious, particularly through the civil society engagement through Brazil, which the Brazilians did a very good job of facilitating and encouraging, but also interestingly the insurance sector, who were much more vocal and much more active than they had been necessarily in previous COPs, and very much led by the Brazilian Confederation of Insurers with other international partners. And that they had sort of a number of different areas that they were prosecuting really actively through the events and other things they're involved in. One is kind of the significant climate-related data that they hold, and that can be of value to other parts of the system to be managing climate-related risk that already exists and climate-related impacts that are already occurring. The second was the really important role of the insurance sector in enabling the deployment of capital for climate mitigation. So whether that's renewable energy or other types of climate mitigation activity, particularly in an emerging market developing economy context, which is often the focus of many of the discussions at COP. But a project that is uninsurable is not bankable. And this is, I think, particularly in the government sort of discussions around finance, there's not a clear understanding of that critical role that insurers play in the deployment of capital. And the third one is a little bit more obvious, but the critical role of insurance in building resilience, whether that's kind of at the household level or at the business level, but insurance products being, and coverage of insurance products being a really important part of building resilience. The final thing I'll say is that and David mentioned the Baku to Belém roadmap, which is the next kind of level of detail as to how we're going to get to the 1.3 trillion NCQG climate finance commitment. And it really took it down to that next level of kind of practicality. And from a private finance perspective, there were sort of 5 key elements of that framework. 3 of them were very focused on mobilising a private capital. That's a massive shift. It was only kind of very few years ago that climate finance in the UNFCCC context meant public finance from developed to developing countries. But 3 of the 5 sort of key pillars of that framework look at kind of blended finance and using risk sharing arrangements, building capacity and coordinating at a country level to have a policy environment that can attract and receive international particularly, but domestic private capital as well, and then really reshaping systems and structures to enable capital flows and markets for climate. So another really positive and interesting shift, I would say.
Thank you, Kristy, and the reflections that speak to the scope of the conversations that take place at COP, and in particular the focus outside of the mainstream and negotiating agenda on practical financial models that are required to accelerate deployment, which is really in the phase that we're in. Joan, I want to come to you. Arup is a global engineering and design firm that works on complex infrastructure, energy systems, sustainable development projects. You lead their global climate and sustainability services. And so no one better placed, I think, to speak to that practical element of deployment and of climate solutions. And that's where your conversations and engagement in Belém focus. Interested in your reflections and in particular on the industrial decarbonisation and climate solutions piece. Our ASFI's recent Sustainable Finance Progress Tracker report found that the race to industrial decarbonisation globally is hotting up and that there's more than 1,000 clean industrial projects now in development. So what did you observe at COP30 and what are you excited about for the year to come?
It was really interesting to see people use the phrase industrial decarbonisation. Like we seem to have settled on that phrase. It's not hard to abate or green industries or clean chemicals or something like that. Let's all pick industrial decarbonisation. I think that becomes a meme or a catchphrase that we can all use. And we had Marcus Dorr on, who's from MCI Carbon, on one of our panels, and he said, we're not hard to abate, we're ready to abate industries. So there's a real gung-ho attitude from the industrialists who said, right, we're ready to go. Arup's in this space a little bit by accident. And then the reason why is because we're involved in the mega projects of infrastructure. And if you look at any government budget, the vast majority of the sums of money are going in Australia to building roads and tunnels and rails. And for a while, we've understood those as city shaping projects or place shaping projects, but actually they're economic transformation projects, because with the way you spend that money, you signal to the economy about what you want the economy to do in response. And so what we've found is if you can de-risk the demand for decarbonized industrial products like concrete, cement, specific flood solutions, specific fuel solutions, then people can invest in confidence, new plant, new equipment, new sites, access to water, all of that stuff. And so everyone's ready to go if only the demand was guaranteed. And so the discussion we're having with the project owners is the policy. You're setting a policy to decarbonize at this rate. You're purchasing and what you are willing to take on has to at least keep pace, hopefully do better and be a leader in that. And so the really thoughtful project owners of these big infrastructure projects are using their buying power to also do economic transformation. Interestingly, in the last 5 years, we've gone from, actually all of the global contractors are in Australia. They've said, you've got more mega projects in Australia than anywhere in the world, except for the Middle East. And the thing is, in the last 5 years, they've gone from not being very interested in carbon or climate to really desperately asking us what they can do, because all of their bonuses now depend, they're often European contractors, depend on what they achieve in terms of carbon. So we've had lots of things line up in Australia, stable policy environment, lots of money being flown into big economic moves, including the Olympics, I'd say. Contractors who are now incentivized to find and search for and accept solutions. And now these new supply chains and new ways of working are being showcased at the global trade fair that is COP. And so I think what I'm seeing is Australia kind of going from we're the quarry of Asia into actually we've got something, we've incubated something quite unusual here, a set of circumstances that mean we can talk about industrial decarbonisation of hard to abate. We have the energy for it, we have the policy settings for it, we have the workforce for it, and we have the money for it.
Oh, thank you, Joan. I can't resist asking a follow-up question to that, because it's such a rich vein of conversation, but kind of focusing in on the Australian context. As you say, we've got all these things in place. And we know that shoring up our future green exports is essential to make up for, or hopefully overcompensate for, what we know will be a decline in our fossil exports over time. But as we've also seen, interesting your comment about how many of the mega projects we host, of the 70 investment ready projects in this sort of big green industrial decarbonisation space outside of Australia. Our finding was that we host only, so outside of China, Australia hosts only 6, and that actually the competition is really coming from those Middle East countries who are rearing ahead. And so I guess the question is, and coming back to your point around shoring up the demand side, what does Australia need to do to ensure we're not left behind and we're taking up that opportunity?
Yeah, we need to, so I mean, the easy thing is to say, hey, government, stop moving the goalposts. I've been in rooms for sure where our globally owned industrialists saying we're really battling to get the attention of our boards, because we've worked plenty hard to get, this grant from somewhere, and it's been pulled from us, and now that they think we're a basket case. So why would they invest? Your choice is not between, traditional industry and green industry. It's green industry or no industry. So definitely a policy settings, policy stability question. So that's government. There's a demand question. So I'm interested in like group buying, but I'm also interested in demand through market mechanisms. So a lot of, for example, when I was in COP, I hadn't realized how unusual our energy efficiency markets are in Australia. Every state has tradable energy efficiency certificates practically. It's highly unusual, been running for since 2009. And as you ratchet up, it's like a renewable energy market. It just guarantees a level of demand. So I think a combination of market mechanisms, people who are handling large sums of money, policy stability, and then we've got people who are willing to do the work.
Excellent. Well, that sounds like a good agenda going forward for next year, irrespective of where COP31 is being held. Nicole, let me come to you. Many people in our audiences know you as the leader leading the development of the Australian taxonomy, which was released in June this year. And since then, you've been working with 10 Australian banks and investor organisations to pilot the taxonomy and put it to practice. But you've also been busy engaging globally to promote the Australian taxonomy as a credible and very practical model for defining transition finance. You were in Belém, you were also in Sao Paulo the week before for the Global Investment Conference PRI in person. Can you tell us about global developments on transition finance?
Yeah, thanks, Purdy. So, I mean, the discussion around transition finance is been really hotting up, and part of it is exactly to Joan's point. We are now getting to that pointy end of looking at the opportunity, and we're also getting to the point in the cycle. Many of the financial institutions that we work with, they've set their targets, and really now it's getting down to how do we allocate capital. I really like this landing on industrial decarbonisation. I'll say allocating capital to industrial decarbonisation in particular, and other hard-to-abate sectors like agriculture, which probably don't fit well into the industrial decarbonisation framing. These are sectors that, the technology mix is still emerging. Many of these activities actually operate on very small margins, and the demand signal for green goods, as Joe has signaled, is not yet there. And so you have this coalescence where we're almost at this, we're running, we want to allocate capital. How do we do this? This is actually really difficult. And so this question around transition finance and what role the information systems and the rules and the frameworks play to facilitate both an understanding of what transition finance is. That's not going to change the return on investment profile, but we need to have this good understanding of where we got to be putting and allocating our efforts, plus the things that Joan has just spoken about. This has really become a hot topic to speak about. And I think one of the things that many people are realizing with our current information frameworks around climate, financed emissions and tracking financed emissions, it's almost a bit of a lagging indicator. It tells you how an existing asset or an existing set of activities is performing, but it doesn't tell you what you need to do to step down. Right. So this is where this question around CapEx, forward CapEx investment into the decarbonisation of these existing activities, but also where we're allocating new activities so they're performing in alignment with an emissions intensity threshold that is aligned to our Paris Agreement outcomes, is become a key question. And so we've been talking a lot this year, the question around measuring this, understanding this, so that capital can get better at allocating towards these opportunities is a hot topic. And the work that the ITPN has been doing, formerly the Transition Planning Task Force, has really been helping to put a structure in place so that organizations can start to think about this, incorporate transition into their thinking and their strategy, etc. The work that the UK Transition Council is starting to sort of frame up and develop is really saying, well, these are the different things that you need to consider if you as an investor is engaging with a portfolio company. And we've really been working on that bottom-up approach, like what are the things? What are the things that are going to help decarbonize the assets, the activities, particularly in these industrial sectors and in other hard-to-abate sectors? And so what we've really started to do is seeing we need to start to come together with the frameworks and the capital allocation piece to put in place credible approaches to transition, and also then facilitate and better support conversations with policymakers and others around how we shore up those demand signals and put in place those policies. And so I think what we were definitely hoping is that, if Australia were to host COP, we could really accelerate this conversation and bring together a global coalition around credible approaches to transition. But I don't think it's all lost, because these conversations the need is still there. These conversations are ongoing. And even though some of these multilateral forums and approaches can be quite complex, what we are starting to see, and I steal the term from Sharon Burrows, who was on a panel with me at COP, minilateralism is also like a lever and an angle that we increasingly are using. So we are continuing to have smaller conversations with like-minded jurisdictions that are also tackling this issue, both at the kind of credible asset level and at the top. We're working with our counterparts in the UK. We continue to work with our counterparts in Singapore and Canada and others, and really still see opportunity for Australia to play that pragmatic leadership role that David was talking about, to bring together parties to keep moving this agenda forward.
Thank you, Nicole. Just as a follow-up, I guess, I want to ask each of you, what are the concrete opportunities for global collaboration on climate? And if you had one that you would want to see taken forward next year, what would that be? So Nicole, I'm going to come to you first and just ask you to put a little bit more flesh around what you see as that alternative prospect. If it's not Australia as COP president, leading a kind of global initiative on transition finance, what does it look like, and who are the key partners we would be looking to work with?
Yeah, so I mean, with regards to transition finance, we're already working with partners under a multilateral umbrella, so with the UNEP-FI and others, to work really closely with our regional colleagues in Singapore and other parts of Southeast Asia to get a good understanding of what the different approaches are to transition finance. And as a part of that, we'll start to test what is emerging as a set of sort of global principles around credible transition finance, and drawing in others like the UK Transition Finance Council and further abroad to join this coalition that's really kind of coming from Southeast Asia to support, you know, both entity level understanding of transition and, you know, transition and taxonomies and others. So we see that work continuing, and we will play our part to continue to coordinate with these different parties to drive a more cohesive and converging approach to transition. I did want to kind of throw another one. I know you said one, but I might leave it to others, but I feel like adaptation and resilience is a really fantastic agenda. The kind of arrangement that we have with the Pacific is an opportunity for Australia to actually show leadership with our Pacific partners and neighbours and with our region. And I see that as another key area where we can really move forward, and Australia can drive that agenda.
Nicole, I'm not going to let you off the hook since you dangled that one out there. I said concrete opportunities, so tell us what that looks like. I know you have ideas.
Well, I mean, I think what we are really seeing through the National Adaptation Plan and, you know, the work that the Actuaries Institute and others have just put out is that people are ready to invest. People are ready to have that conversation about what does the mobilization of private capital towards adaptation and resilience look like. You know, Joan mentioned on the call, you know, we do have a set of indicators that came out of the COP30 process that gives us something to hook onto in terms of where can private capital start to invest. We, together with our members and others, have been calling for the development or expansion of the Australian taxonomy to include adaptation and resilience, and we see this as a significant opportunity to work with the sector to get an understanding of what is the methodological approach that we would take to identifying practical on-the-ground investments that can drive adaptation and resilience, and then for Australia to develop an approach that is world leading, and as part of that process to actually from the beginning integrate interoperability to start to work with our partners and other jurisdictions that I know are also very interested in this agenda. So, you know, for me, practical outcome would be Australia taking the lead on the development of adaptation and resilience in the taxonomy, which will actually really support the identification of areas and opportunities where private capital can invest, and doing that in a way that brings and works closely with our region.
Mm-hmm. And that's also consistent with the National Adaptation Plan, as foreshadowed. This might be potential for next year, and we've seen others, including the Climate Change Authority, back that in as a first step, as well as lots of support from across the ASFI membership for doing that. Joan, I'm going to come to you. You've already put out a few really interesting kind of ideas around buyers groups, etc. What would be the one initiative you'd like to see taking forward next year?
Well, I'm going to depart. Sorry, Purdy. One thing that we're really working on is environment-led design for new development, which is, I mean, everyone's read, or at least read, a book review of Abundance. You know, how do we get this huge infrastructure investment going while maintaining our social license and our environmental values and nature? We, as a global group, are looking particularly at Australia, because we have so much nature and we have such sensitive land uses, about how you do approvals and design so that you measure twice, cut once. Is our old 1970s environmental regulations were there to protect in a particular way, and there must be a different way of doing both projects and regulation so that you can achieve both at the same time and maintain momentum. So although the application will be very, very local to every place, someone has to lead the way, and it might as well be the most difficult jurisdiction, which I would call Australia.
Oh, I love that because it's fundamentally important, and getting that balance right and carving a pathway where there are win-win outcomes is so critical. Thanks, Joan. Kristy, what's your one cooperative idea?
I will sort of build on Nicole's sort of thematic approach to adaptation resilience. I think that this is an area where the whole of finance sector collaboration, as well as collaboration with both government, as well as other parts of sort of the business sector and real economy, makes a huge amount of sense. I think it's also a great opportunity to bring the insurance sector alongside banks and investors, given the shared sort of objective and alignment of goals in that space. Nicole talked to kind of the development of standards and a taxonomy for at the national level, kind of identifying what counts as adaptation resilience. I would build on that and then say, and then looking at what kind of financing models can support and unlock not just kind of purely public or purely private, but in that blended space, what are some of those that are scalable and replicable and are able to kind of mobilise capital at the scale that the outcomes at COP sort of recognised is needed. And there's lots of good kind of examples of that, but what we haven't cracked is that at a sort of a systemic scalable level yet.
And Kristy, just to follow up, because you mentioned the global the forestry fund that was launched in Belém, and the process that went through to bring in different stakeholder perspectives. You, as through ASFI and through your whole career, have a lot of experience in bringing together multi-stakeholder coalitions. Blended finance is the sort of epitome of that. So who are the kind of different players that you would want to be coming together to look at that, to have a go and have a crack at that model?
Yeah, and traditionally, I think blended finance models have sometimes been cooked up by various kind of investment managers or financial institutions that have not necessarily been co-designed or through that multi-stakeholder process. But I think what increasingly we're learning through then the ability of those vehicles to effectively not just raise capital, but also deploy and achieve the outcomes that they're designed to achieve, is that bringing that broad set of stakeholders around through the design phase is important. So that includes the kind of types of projects or the businesses that ultimately you think will be the recipients or the investee companies from that fund. It includes capital providers. It includes sort of different parts of the policy and civil society landscape, as well as kind of research and others. So multi-stakeholder design, which is broader than just those who will invest or just those who will receive, and creates this shared understanding of not just there's a huge value of finance that's needed, but what type of finance at what point, with what types of risk mitigation mechanisms, and who is best placed within this group to hold different types of risks, and what are some creative risk sharing approaches, is all really important in that kind of co-design process, I would say.
Thank you, Kristy. And that brings us to the end of the session. I think, well, clearly there are many who are disappointed that Australia will not be hosting COP31 in Adelaide next year, and I count myself among them. It's also clear that the opportunities abound, and that Australia has an important role to play, and that in particular that ongoing cooperation between different participants across the finance sector, across the broader corporate sector, and with government will continue to be fundamental. So thank you, Joan, Kristy and Nicole, for joining us. Thank you everybody who has participated and watched this webinar. Your feedback is really important. Please take a moment to fill out the survey. The QR code is on your screen, or you can find it at that link. Thank you very much, and enjoy the rest of your day.